Hey Alpha fam, let's do a quick market update. Before we begin, I do want to say that nothing in this video is financial advice. Everything is for educational purposes only. This is just my own analysis on the market. Also, if you're new to this channel, if you could please like, comment, and subscribe, we really do appreciate all the help. Now let's get into this market, guys. So yesterday was a little strange. The reason I say that is actually we had pretty good data come out. Inflation came out at 2.8. They were projecting it to be at 2.9. This just kind of secured that we are probably most definitely going to get rate cuts next week. We can also see that when we look at poly market, we're still sitting at about a 93% chance of rate cuts. This market's absolutely infatuated with rate cuts right now, guys. So this is something that people have to monitor. I think what's occurring is the market is just making a concession of higher highs and higher lows. All right. And then you can kind of see this here on the 4 hour. Again, guys, I've said this before, we're going into next week, and next week could be an interesting week because typically going into FOMCs, we de-risk. We are looking at, this is the weekend, today's Saturday. I don't really trust the weekend pumps because the easily manipulated moves in the market because there's not as much volume. You're looking about 50% of the volume that is on a normal market today, and it's very easy for these market makers and exchanges to sweep liquidity. With that being said, guys, looking at this, if we're still making this five-way count, you can say this is still the one, this is the two, we're still in our three. We're waiting for it, and I'm guessing because we're going to de-risk into the FOMC, I can see this thing probably pulling back and then getting a move to the upside. And I'm also not saying that this necessarily has to reject off the 50. I'm just kind of giving you an idea of some of the layouts of how it could play out. Another thing that we could do as well is we could also put a fib retracement from right here to right here, and we can look for some confluence. And honestly, guys, as you can see, this 382 is something that has a little bit of confluence because it's also where the 50-day comes into. So I bet that we have a little bit of a struggle to get through here. And then I could even see maybe this 4 wanting to maybe come back down and retesting this 236 before making its descent up. And then also, because I know a lot of guys like, well, if we're in the third wave, why are we coming down? Because these things don't just go in a straight wave. Sometimes you'll get these things breaking down into A, B, C. So this could have been the A, this could have been the B, and then this could be, we could be working on the C. With that being said, guys, I also want to monitor Bitcoin dominance, something that I watch, quite closely because I don't hold Bitcoin anymore. I sold my Bitcoin. I'm obviously a Bitcoin maxi, but during the active bull runs, I held my Bitcoin from 27,000 and started scaling out when it got to 100,000, taking that capital and reallocating into altcoins. So my positions are in altcoins. With that being said, not that I monitor and vary what the market's going to do based upon Bitcoin because Bitcoin controls the entire market still. So with that being said, because I do hold alts, I want to continue to monitor Bitcoin dominance because I want to make sure that if I see things starting to break, that it could be a warning sign that maybe I need to de-risk out of my altcoins, get into a cash position to be prepared if we think we're going to go down lower. Obviously, being in active trades, you want to make sure that you are making the best decisions possible based off on a set of probabilities. So with that being said, Bitcoin dominance did this rejection that we talked about the other day. I wouldn't be surprised if maybe he wants to drift back up and maybe hit it again, maybe do like one of these double topping patterns, like you kind of get this one move up, this thing comes down a little bit, and then maybe it comes back up and does it again before the breakdown. It's still a little early to see. I like to look at the weekly. The weekly still looks good. We're still in the red. I'm guessing we should, what I'm kind of thinking is this. Once we get past this FOMC, and then especially once we get past this Japan carry trade issue that we're dealing with over there, I think the market's going to get an opportunity to run. They call it the Santa rally, and I could definitely see, especially after the 18th until the end of this month, pretty aggressive run up, as long as nothing crazy happens, guys. Like I said, we don't think we're out of the woodworks yet. I think a lot of people have to be very cognitive of what's going on and be making very good decisions. So something else I like to watch too, this is our Ethereum versus Bitcoin chart. You can see we broke above this right here, and we've never, once we got above this level, we've been kind of struggling to get back above the 50-day, and then we kind of broke back below. But I think because we've broken out of this descending wedge pattern, I think we're going to see Ethereum continue to outperform Bitcoin. Ethereum has a lot of institutional demand and a lot of attention onto it right now. there's a lot of treasury companies that are, with Ethereum, and I'm in the camp that I would love to see, even though I don't personally hold Ethereum, I would love to see Ethereum run, because I think that it is a big key into altcoin season. The outperformance in Ethereum. I still think the liquidity rotation is a real thing, which is the liquidity rotates to Bitcoin, goes down into Ethereum, then L1s and large caps, and then, on its way down, mediums, lows, and then of course alt season. So seeing this looks pretty good. All right. And then I always like to just kind of vary what Ethereum's doing with its actual chart. So we look at Ethereum. It's doing something kind of interesting right now. You can see it's kind of held this support right here on this way down. And then it had like this right here, which broke out of. All right. So it broke out of this. And this kind of looks like it just wanted to come back down to do a retest of this level right here before making an actual move out. So you'll get a lot of these flags do breakout retests before the actual move, which is also an opportune time if you're trying to be a little bit more cautious, waiting for these kind of confirmations. But I always tell my guys, what we like to do at Alpha Syndicate is we want to position before the move. We don't want to be reacting. We want to be proactive to the market. We want to look at the market, analyze it with a set of probabilities and a set of directions based upon macro fundamentals and technical analysis, and then try to make the best decision possible on which direction we think it's going to go. With that being said, guys, like I said, this thing is looking still pretty decent. Looking at USDT dominance, guys, this thing is still making a lower high kind of pattern right here. I really want to see this thing kind of get some... I want to see it really break down. I don't want to see it go down a couple percent, then go up a couple percent, because it's just kind of hanging out up here. We want to see this thing kind of drop. Something else that I've been monitoring too is the Dixies finally broken back below this 50. All right. So this is kind of important, because generally with risk on assets and any assets, if the dollar or the Dixies going up, this means the dollar has higher purchasing power, which means it takes less dollars to purchase assets, which means assets tend to lose their value in price according to USD. Now the exact opposite, when the Dixie drops, that means the purchasing power of the dollar is less, and that means it takes more dollars to purchase assets. So with that being said, looking at the Dixie breaking back down, we've been tracking this for over a year, guys, when we first got this breakdown way back over there in February, and we've been pretty much tracking this thing the entire time. I would like to see it if we come back and look at what Trump did last time with the Dixie back in 2017. You guys can see it. He broke it down from basically all the way down. He got it to about 88, and then it found major support and bounced up. This would be the natural level if we get a continuation of a breakdown of the Dixie over the next, X amount of years or whatever, to come back down to this level and revisit it. You can see. And then if I extend this over, this level's got a little bit of significance and confluence, because you can see this is prior resistance, broke through, future support. So let's see how this thing kind of goes when we continue getting this breakdown. On the weekly, we did a bearish retest on the weekly. It looks pretty good. So I think we'll continue to hopefully see the Dixie drop. Also, let's look at TradFi markets. TradFi markets had a pretty good day yesterday. It was kind of crazy. They basically made up, at first they kind of came back down, and then they made up all of it very fast. TradFi markets, and especially the S&P 500 and NASDAQ, are doing really, really well. I mean, S&P 500, honestly, it's very close to making a new all-time high. I am in the camp that I can see a $7,000 S&P, and I think it's something that's very doable. With that being said, guys, it is the weekend. I always tell guys on the weekend, I watch these things pretty cautiously. I'm obviously in active trades, and I'm at really, really good entry points. So a little bit of volatility doesn't bother me, but I also know that I also don't want to trust blindly some of these weekend pumps. I take things one day at a time. Hopefully next week we'll see and get a little bit more direction, especially with this whole Japan carry trade thing unraveling. Hopefully we can get maybe some reassurance from them over there that they aren't going to raise interest rates, and we can kind of get past that negative macro event. Other than that, guys, I don't really see a horizon of anything else negative, only really bullish sentiment and bullish things that are happening next year. And I'm going to be making a 100% macro video, really going in depth on macro liquidity cycles, business debt refinance cycles, and how all these things kind of tie together with digital assets and why we are right here right now. So with that being said, if you also want to learn this type of stuff at a deeper understanding, at a deeper level, if you want to be able to network with other people that are in this industry along with other industries, if you want to be able to take your life back under control and really level up, click the link below, guys. We'll see you inside.